What's up, guys? Today I took a loss in the market, and now it was honestly a win overall, though, because of the way the model I saw end up playing out, and my bias was overall correct. I just did the move a little too early. But going into the market today, obviously on the 1 hour, well, I'll show you the 4 hour. So we have this big SMT. We're in this 4 hour imbalance, also a daily imbalance over here. But we've come down, we created lows, two equal lows right here. This is going to be your sell side. We come up, we come back down, we rebalance into the inefficiency, probably like at equilibrium. Yep, right into equilibrium, and then we come higher, and that is when that SMT is created off of ES. Let's look at ES. See this high right here? This is how you know it's an SMT, because one pair takes the high and the other doesn't. So if you were to draw a white line across right there and draw a white line across from here, only on one of these pairs does the candle go through the white line, so that is a SMT. But seeing that gives me confidence to go lower. Also with this inefficiency in completing that 1 hour market maker buy model last week, which was right here, a little higher. This was what we wanted to see taken. So we see that taken, and yesterday, if you saw my video, I talked about how I think this is the model for this week, and we will continue to sell off and rebalance it until we get all the way down to these equal lows that I just talked about. So now I have this model out, and this is my bias. I am bearish bias. I want to see price come lower. I like that we were accumulating because it goes AMD, accumulation, manipulation, distribution, which is what you want to see. You want to see price like essentially build up power until it eventually launches. But there's two areas I messed up in today, and I'll show you both of those. So going here, well, first off, I didn't even see this 1 hour fair value gap, but not the biggest problem in the world, because if you zoom into the 15-minute, I had this one marked out, but I still should have had the hourly marked out. And now I got on the charts around 8:30, and I see this build up. Now this isn't like clean buying power or anything like that that's telling me we're going to go higher. I was weary of these highs right here just because it is in line with the search and destroy model, which I think that means the search and destroy model. I'm just now realizing this. The search and destroy model probably played out on, yes. Nope, it didn't play out. It almost did, but it didn't. But we'll go back. That doesn't matter. But so that was the only thing that kind of went against my bias overall and had me a little weary. But I wasn't mad at it or worried about it at all. And we just took this high right here. So technically this is our soup. Turtle soup is when you take highs inside of an imbalance. But I'm going to zoom in, and this is like, wow, I'm like, this is money right here. So I'll do a replay for you guys. My monitor feels like it's on like 60 frames. But we're right around here. I get on the charts at 8:30. So right around here. So we'll play a couple candles out for you guys. So we're coming. Okay, we sweep this high barely, and I'm like, okay, that's kind of nice. I want to see, this is where I messed up because this is not the time I trade. I was like, I want to see a market structure shift, and I'm like, okay, this is my market structure shift. Now, when you want to see displacement through a recent swing low or swing high, you want it to be clean displacement, not ugly displacement. This is ugly displacement right here. There's no fair value gap created. There's wicks everywhere. It's not the cleanest displacement. So I was antsy. I think I might have not wanted to miss the trade or something along those lines, because I was like, oh my gosh, this is the model. Okay, here's our standard deviation. It aligns with this and it aligns with this. This is where price is going. So I need to get in this trade. So my first trade came around, is probably literally like right. My entry was somewhere, I think on the next candles where I get my entry. What time is it? Yeah. Yeah, I entered here. I had my levels, this is what I wanted to see. My stop was somewhere around here. I think I got stopped out right here. Might have been a little tighter. I think I was like this. But this was my first trade, and this is where I got stopped out the first time. But I had super low size because this wasn't the time I trade. I don't trade 8:30. But so I get stopped out there, but I use super low size because I thought, price was ready. But the key part that I missed today is I didn't align time with price. So we're going to get rid of this, and we're going to put this at market open. And market open is a key point in this model right here. This doesn't even matter. So we do that, then we get real displacement. Okay, so if this is real displacement, we want to see a close below this. Okay, now the difference between this displacement right here and this displacement right here, the fair value gap, the confluence, the idea that market is ready to go lower. Couldn't spit that out. So that's the conviction correct. That is the right word. The conviction. This is more conviction than the last one. But this is our market structure shift. Now this is way cleaner. This is there's already an SMT right here. And then, but we're not at 930 yet, so we shouldn't think about trading this model. It looks like time is going to align with price. We sell off a little more, create another low in our market maker sell model. And then we come up, we're just, whoops, let's go. Well, we'll go back. Okay, I went a little too far forward, but it's okay. So at that same time, around 930 is usually when you have a manipulation move. And we do. We have the last manipulation before we're ready to go lower. We create another SMT right here. The manipulation move was more so on SPX than it was NAS, but it's okay because the pairs correlate together. And when you have correlating, I think it's called correlating moves. It's not. That's the wrong terminology, but price is going to move way faster when the pairs line up. So this should have been your real entry off of the order block. I didn't notice the order block today. One of my friends did, but you could have waited. And then I took this trade right here, but I didn't take a good entry. My entry it wasn't the worst, but my stops were too tight. My stops were like right above the fair value gap, and I entered before 930. And this would have been your target. Pull out your standard deviation. Watch where price ticks. Watch for exactly where price goes to. So this would have been, this is the trade I took, and this is me getting stopped out right here. So like I lost $600 today. Not mad at all. Very happy actually overall. But if we were going back and redoing this, we would have had this marked out, order block marked out, and you would have waited for the manipulation move and probably went to your 1 minute time frame and then got a better entry on that candle, or you could have entered at the top wick around like here. Let's get this out here, and then had your stops above the SMT. I had way too tight of stops, and I should have had a protected stop loss. But I'm just going to show you guys what the trade ended up doing. So you see instant sell off, TP1 instantly hit, TP2 instantly hit, price wicks that area, starts to consolidate, comes back up to equilibrium, sells off even more. And the reason that price moves so clean is because we aligned, this is internal bias right here. This whole right here is internal bias. You got to align internal bias with external bias. Do you notice this is the same exact thing, just zoomed way in? And look how clean that move was. Literally one candle took out the whole trade. But I lost today. I was, maybe you could say I was impatient. I didn't wait for the clean entry. And yeah, it happens, but today's a really good day. That was the trade. I lost $600. And yeah, that's all I have for you guys. Thank you.